Welcome to The Explainer. Right now, the financial markets are telling two completely different stories. On one hand, you have the broader stock market, which is, well, it's slumping. But on the other hand, the market for new companies going public, IPOs, is absolutely booming. It's a paradox that, on the surface, just doesn't make any sense. So let's get into it and figure out what is really going on.
First, let's just set the scene. The bears are definitely in control right now. We're talking 6 straight weeks of the market being in decline. The Nifty 50, which is a key benchmark for India, has dropped nearly 1%. This isn't just a bad day or a bad week, it's a pretty stubborn trend, and it's making a lot of investors nervous.
And don't expect any relief from the central bank either. Naval Kagawala over at Shriram Wealth puts it pretty clearly. Even though inflation is kind of where they want it, interest rates are not going down anytime soon. What does that mean for you and me? It means those economic headwinds, they're probably sticking around for a while.
Okay, so here's how we're going to unpack all of this. We'll start with exactly why the market is down. Then we'll get into that surprising silver lining, the IPO market. We'll check out who made a splash last week, meet the new companies asking for your money, and finally, see what's about to hit the stock exchange this week. So, first things first, why is the broader market having such a tough time? Well, it really boils down to a perfect storm of issues, hitting investors from both at home and abroad. The pressure is just coming from everywhere. You've got the US slapping a big new tariff on India, you've got companies reporting so-so earnings, and a big one. Foreign investors, the FIIs, have been selling and selling consistently. Add to that the fact that our own central bank is keeping interest rates high, so borrowing money isn't getting any cheaper. It all adds up to a really challenging environment for stocks.
So with a market looking like this, you'd think every investor would just be playing it super safe, right? Just sitting on the sidelines, waiting for the storm to pass. But is that what's really happening? Yeah, not quite. This is where it gets interesting. Because while the main market is in the doldrums, one little corner is on fire. The IPO market. See, in a flat market, investors get hungry for growth, and brand new companies promise that potential, even if it's a bit of a gamble. And that's the paradox we're digging into today. Get this, 18 in just 1 week. While the overall market was down, 18 separate companies went public. This is not a market that's sitting still. It's a total beehive of activity, running completely opposite to how everyone else is feeling. Okay, so a ton of companies went public. But how did they actually do? Was it all champagne and confetti? Let's break down some of last week's biggest debuts to see who won and who didn't.
You can really see the investor appetite here. Look at Aditya Infotech. It was oversubscribed 133 times and popped more than 50% on day 1. NSDL and Lotus also had solid starts. But notice it wasn't a party for everyone. M&B Engineering came out flat, and Laxmi India Finance actually listed at a loss. It just goes to show, even in a hot IPO market, investors are still being picky. Let's just zoom in on NSDL for a second. It debuted with a nice 10% gain, but since then, it's rocketed up to over 62%. So what's going on there? It's a powerful 1-2 punch. You have the government pushing hard for digital finance, and at the same time, there's been a 55% explosion in the number of regular retail investors. That's a massive tailwind for a company like NSDL.
And you see the same kind of story playing out in the market for smaller companies, the SMEs. You had absolute rock stars like Flysbs Aviation, which almost doubled on its first day after being nearly 300 times oversubscribed. But on the flip side, companies like Katex Fabrics and Essex Marine started out in a 20% hole. It's a real high-risk, high-reward game.
All right, so that was last week. Now let's shift gears and look at the new players stepping onto the field. This week, we've got 4 more companies opening up their IPOs, 2 on the main board and 2 smaller ones. First up is a brand you might have seen online, BlueStone Jewellery. They're a direct-to-consumer jewelry company selling gold, diamonds, you name it. They're looking to raise a pretty hefty 1,500 crore, mostly to fund their day-to-day operations.
The second big offering is Regaal Resources. Now, this is a cool business. They take maize, yep, corn, and turn it into specialty products like starches and food powders. They're looking to raise just over 300 crore, a big chunk of which is going to pay down debt. And real quick, the two smaller companies hitting the market this week are iCodex, which makes software for academic publishers, and Mahindra Realtors, which is in the construction and infrastructure repair business. Both are looking for capital to fuel their growth.
So we've seen who's asking for money. But now for the moment of truth. What does the actual investor demand look like? Let's check out the companies that just closed their IPOs and are getting ready to trade.
And wow, the difference in demand here is just staggering. I mean, look at highway infrastructure. It was oversubscribed by more than 300 times. That is just astronomical demand compared to the much more modest, though still healthy, interest in Knowledge Realty and JSW Cement. So, you might want to mark your calendars. The super hyped debut for highway infrastructure is set for August 12th. Then we have a really busy day on August 14th, with 4 different companies all listing, including JSW Cement. And finally, Knowledge Realty Trust will hit the market on August 18th. And all of this brings us back to that one final crucial question. You've got this nervous, falling market on one side, and this frenzied, almost manic IPO market on the other. So what are we supposed to make of it all? Is this crazy IPO activity a sign of deep confidence from smart investors finding the next big thing? Or is it maybe a warning sign, a bubble of speculation in one tiny corner of an otherwise very worried market? That's the paradox to think about.